Good evening and welcome to everybody here tonight and also watching us live on YouTube. I am Councillor Whaley Ho, the chair of this Audit and Member Standards Committee. Now, we have quite a large agenda to go through this evening, so I'm going to kindly ask members when they would like to contribute to the debate, please could we keep it to questions, and that will help the evening go smoother and a bit quicker as well. So with that in mind, we will now move on to the agenda. Item number 1, apologies for absence. I only have one at the moment, which is Councillor Dave Robertson. Have we received any others, Will?
Chair, we've received no other apologies for absence.
Thank you, Will. Item 2, declarations of interest. No hands were raised. Item number 3, which is the minutes of the previous meeting. I'm going to take these as read. Any comments on those? Can I have a show of hands if you're happy for me to sign those off? That brings us to item number 4, which is the audit finance report for Lichfield District Council 2021-22, and that is coming from our external auditors. Thank you.
Thank you, Chair. So for the 21-22 auditors report, I don't plan to go into too much detail because this actually came to committee at the start of last year, and so what I just probably wanted to do is give you updates of what's happened since. So when we presented this report, we had a number of outstanding areas, and the 2 key areas where work was outstanding was in relation to the valuation of property, plant and equipment, and investment properties. So we've completed all our testing on those areas, and we haven't identified any material misstatements or anything to be concerned with, and that's actually documented in the report. The other area was around the pension valuation. So because of delays in the audit, what that meant was when it got to 31st of March 2023, there was new information available in terms of the triennial evaluation of the LPS pension liability. And when we, as auditors, we had to consider the latest information available. So we requested for the councils to undertake this IS 19 review based on the triennial evaluation. And that identified that there were material differences between what was presented as draft financial statements pre-31st of March 2023 and then what was actually going to be put in as the revised financial statements. So thankfully, the council management agreed to update the financial statements, and therefore what that means is we're happy with the figures presented in the revised financial statements, and we're satisfied. At this point in time, it's free from material misstatement again. The only issue we've got now in respect of 21-22 is we are waiting for assurances from Ernst & Young, who are the Staffordshire Pension Fund auditors, to give us assurance over the triennial evaluation. So they've got a bit of testing they have to do to provide us assurance to show that the information used in the compiled statements is correct. So we're waiting that information before we can actually sign off the audit agreement. I've had an update from Ernst & Young, and we are expecting the report probably early July now. So it was originally expected in November. Now, then it was told in December, but now it's moved into not July, say January, sorry. It's in early January. Sorry, that was my mistake. Yeah. So we're expecting the report in January. What we've done is actually written out to them under the PSA framework contract, and kind of just to try and push that process so we can get the letters earlier than that, hopefully, and hopefully put a bit of pressure on so we can actually then sign off the opinion in 21-22. If I take a break there before going to 22-23, so I'm happy to take any questions you may have at that point.
Thank you very much, Avatar. I think I'll kick us off with some questions then. We've been waiting for the evaluation and it keeps getting pushed back. It's November, December, now January. How confident are you that we will actually see those in January?
It's something which is outside of my control and Anthony's control. So we can apply pressure. It's up for the other supplier to actually get their work done. We're putting the pressure on. Can I say 100% confident it will get there by January? No, but I'm hoping.
Thank you, Avatar. Any questions from members or officers? Anthony, thank you.
Sorry, just a couple of mentions to that question, Avatar. So, you're saying January. The government admitted bringing in sort of emergency measures to get the backlog cleared by the end of this calendar year, which I don't think they've done as yet, but I'm quite happy to be corrected on that. If they don't provide that assurance until January, will we get caught by those emergency measures and therefore will we be into a territory of a qualification or a disclaimer?
So if the backstop does come into effect on the end of this calendar year, then that is a possibility because we'd have to say, give an opinion which would be a disclaimed opinion which says we haven't been able to provide assurances over this balance because of the pension number. We haven't hit those assurances. We're still working to the principle that the backstop date is going to be the 31st of March 2024. So we're quietly confident that before then we should have those assurances and therefore we can actually sign off both sets of opinions.
Thank you, Avatar. Anything else from you? If I can just add on to that, whether it be Anthony or yourself that can answer this for me, what would the implications be for if we had to receive that disclaimer?
At this point in time, because it would impact so many authorities across the country, it wouldn't make too much of a reputational damage or anything. However, what it would mean is for the 23-24 financial year, your new auditors who are coming in would have to re-audit some of the areas on open balances to give themselves assurances. Because normally what you can do is take the assurance from the previous external auditor and roll that forward and say, we don't have to do any work on these open balances. But then your new auditors might say, actually, we haven't got enough assurances on some of these areas, so they might have to revisit and audit some of those areas.
Thank you, Avatar. Any questions from members? I'm not seeing anyone, so would you like to continue with the presentation, Avatar? Thank you.
So now I'll move on to the current year audit, which is 22-23 audit report. So we are significantly progressed in the audit. So on page 51, I think, of the pack, you can see there's a list of what is the outstanding areas of audit. And as we speak, some of those things are being ticked off as we go through. So we've had things like the completion of audit work on the net pension surplus around IFRIC 14. So we are getting responses now from the council to work through that and actually be able to clear that as near to completion. Senior officer remuneration down to a few queries and getting that resolved, completed. Again, with housing benefit expenditure, that's nearly completed too. Work on testing the property, plants and equipment, I'll come on to that later. But we're getting to the final, stages of the audit. So we're in a good position in terms of getting to conclusion. But that same issue around the IS 19 assurances still exists. It will impact the 22-23 financial statements too. So if I go into more of the detail around the report, so we haven't changed our materiality. So on page 55 of the pack, you will see we have this materiality set for planning was 829k and various little things below. We haven't had to change that based on the revisions. But as part of our reporting, anytime we find errors which are above 41,500, we will report them in. So you might, that's our scale of triviality report. in terms of significant risk, so we had a significant risk over management override control. This happens every year. Every audit firm will have this risk there, and what we do is testing around journals and estimates to give us assurance that there's no management override control. The testing in this area is substantially complete. I think it's actually all complete now, and we have not identified any instance of management override control. The other significant risks that I want to draw attention to are the valuation of land and buildings, the valuation of investment property. So most of our work is all done on this. The one issue we identified this year was in terms of investment property, the council, through their own measures, picked up an investment property that had been omitted in previous years. So we're comfortable with the valuation of that investment property as at for the year ending 2023. But what we have gone back to management is challenging. So what will happen to the open account? So we've got 2021 opening balance, 21-22 closing balance. What will be the value of that asset to, and is there a chance of that if though that balance being materially mistaken could be submitted from the accounts? So Anthony has contacted the valuer and has provided me further assurances to give me evidence to say actually even with that omission of asset, the accounts might be materially misstated. So my intention is to put that as just as a finding as an unadjusted error for the prior years, and say it's not materially misstated in that asset, the values of all. The other area of work which is outstanding again is around the pension fund asset work that we've done. So most of that work is done. That's subject to my review going forward, and then we also need to get the IS 19 assurances from EY from Staffordshire Pension to conclude on that work. But today, in terms of the normal work we do, we haven't identified any material mistake or material omission from there. In terms of other areas of work, there's not, I wouldn't say there's any other significant findings in the report, but I'm happy to take any further questions.
Thank you very much, Dr. Yes, Councillor, sorry, Marshall.
Marshall.
Yeah.
Thank you very much, Joe. Just a very quick question. I'm just looking at page 58 and valuation of land and buildings, which you mentioned just a few moments ago. 37.512 million as of the 31st of March of this year. It's quite a substantial asset. I think it's revalued, is it every 5 years? Does it say it's revalued every 5 years? Yeah. How much has that grown? Or I'm assuming it's grown in the last 5 years. Do we know?
It has increased, the valuation has increased. And I can't remember, Anthony might be able to help Jay in terms of the revaluation cycle of that, but the council do refresh the valuation rate. And I can't remember if it is every 5 years or more frequent with that you're doing it.
Could I just come back on that for a second? I was just wondering what effect the last 18 months of inflation has had, because obviously inflation has been running at roughly 10%, I think. So one would expect that valuation to have increased quite substantially in that time.
So we have seen from market data with various rates and valuations that the values have gone up.
Okay, thank you. Thank you, Chairman.
Thank you, Councillor Marshall. I'm going to bring in Anthony Thomas to help answer Councillor Marshall's initial question.
So in terms of the trend of valuations, Councillor Marshall, so we value probably 90-odd% of our assets every year, partly because of the material level of the assets and the risk of material mistake. The trend is quite difficult over the last few years because they were impacted significantly during the COVID period, so they went down in a lot of cases because of the market. They've started to recover back up, but trend over that period of uncertainty is quite difficult. So there was a big drop. Now you've got the inflationary pressures, which means you've got a bit of volatility there. So it's not like it's a consistent set of underlying assumptions in that valuation period.
Thank you very much. Thank you, Anthony.
Thank you, Anthony. Councillor Paul Taylor.
Thank you, Chair. Yeah, on the same page, and as you mentioned, There's two properties that were remitted from the investment property fixed asset in previous years, totaling £750,000 worth of value. That seems like quite an omission from previous years. Do we know how that happened, and is that missing from, or was that missing from our fixed asset register in general, and or was it just missing from our accounts?
Yeah, good question, Anthony.
Yes, sorry, so it was missing from a fixed asset register. It was the property team do ongoing reviews of the assets we own, so they review leases, land registry details, etc. And this was one they found. I think it's a long historic owned asset, it's land we own. They found as part of those processes, we got them valued just to see how big a number it was, and it was, as it says there, 750,000 for two assets. That, fortunately, in touch wood, is not above the materiality level, which means it doesn't materially mistake the accounts. But there is, I suppose, there is always a risk of this where the property team are doing these types of ongoing review, and with the very old, long historic assets, there's always a risk that they will uncover something of this nature.
Thank you, Anthony. Yep, Paul.
Yeah, sorry, just to clarify, so these are two discrete parcels of land, presumably not used for anything in particular, but yeah, so it's not beyond the bounds of possibility that there could be more.
Yes, so that it's freehold of land that I believe sits below assets that are leased to other bodies, so that they're not used to deliver the services in that sense. I would have to say there is always a risk that these sort of assets, especially the long held ones that, you know, the council owns part of this building goes back to 1680. So whilst they do these type of reviews and touch wood that they've picked up the majority, there is always a risk with the very old ones that there is something there.
Thank you, Anthony. Any other questions? Anything you want to add, Tom?
No further comments. Just to give you more assurances, though, I think last year we had issues in terms of the audit delivery. We've caught up now, so we're in a better place than we were, say, 12 months ago. And what we intend to do is, when we have the assurances from Ernest & Young, we'll be able to sign off both sets of accounts together completely, and get the opinions out on that basis.
Thank you, Avatar. It would be remiss of me if I didn't ask you this question. I think I've asked you every time about fees. So the proposed fees were considerably lower than what we're actually would be asked to pay now. For the benefit of our residents, could you just explain to us why it's so considerable? Thank you.
So there's an initial fee, which is the scale fee, which is set by PSAA. So this. Okay, so there's a scale fee, but then since the scale fee was published, there's been lots of variations in scope of work. A lot of that is to do with FRC challenges and what we need to do to be able to deliver a safe audit opinion. So we then get to a planned proposed fee, which is after that, those normal variations. Those variations are agreed with PSAA as the contracting body, and the general approval that we can agree those fee variations. Again, at the end of the audit, we then will get formal approval from PSAA that these are okay and consistent with other bodies that we're doing. The other fees that have been added on are just into terms of doing additional work. So this year we have to do additional work around the reporting, which is the pension asset. So in my career, we've never really had a pension asset on the financial statements of local authorities. So we've had to do other work, other assurances, just to make sure we're happy with what is presented in the financial statements. So that creates more work for us to do. On other areas, there is slight delays in, getting audited evidence, and we are still in discussion with what the final fee. I'm not expecting it to go up. We might bring it down again but that will have a discussion offline with Anthony in terms of what we agree before I do a submission to PSAA, say this is the final fee, and they will subsequently approve or ask for further information.
Thank you, Akhtar. You actually answered what was going to be my supplementary question, was whether there was any wiggle room in the fees there as well. So thank you very much for that, Akhtar. Members, we have to take those two items separately for approval. So I'm going to ask for raise of hands for item 4 to be approved, which is the 2021 to 2022 report. Can I have a show of hands if you're happy to approve those, please? And then item number 5, which is the 2022-2023 audit reports. Can I get a show of hands for approval?
Sure.
So, thank you very much. So that brings us to item 6, which is the auditor's annual report for Lichfield District Council 22-23. Choose you again, Akhtar, yeah? Thank you.
Yeah, it's me again. So this report is our auditor's annual report. And what we've done is combined it for 21-22 and 22-23 because of just where we were with the audit. It's happening across the board where we're doing joint reports. Under the code, we have to look at 3 areas: financial sustainability, governance, improving economy, efficiency and effectiveness, and to get and look at the arrangements which underpin at the council how are you delivering value for money in your services. And our report here is very positive. So compared to a number of councils now, where we are highlighting a number of significant weaknesses in their arrangements, Lichfield's arrangements are very good. We do have a few improvement recommendations in the report, but again, these are just to make the process just a bit better, make things underpinning the arrangements just a bit more, taking our recommendation, maybe improving reporting, etc. to members, but these will not lead to fundamental weaknesses or impact on delivery of service. So I'm happy to take any questions on the report. But I've got to say it's a very clean report compared to a number of councils out there at the moment.
Thank you, Akhtar. And just for clarity as well, these reports came in as supplementary papers, which is why they're not numbered on the agenda. So any questions? Councillor Marshall, thank you.
Thank you, Chairman. It's very reassuring to hear those words there, that we are doing better than some. If it was possible to sort of suggest that, would we be in the top quartile within the country? Is it possible to say that, or would that be slightly hubristic to attempt to achieve that?
It's difficult to say that in that respect, but you are in the top. I would say, as an authority, your arrangements are stronger than most. Again, if you look at the content of the report, you can see the improvement recommendations. And what a number of councils are struggling at the moment are with financial sustainability, so depleting reserves and reliance on how can they meet their medium-term financial plans. And we introduce rafts of saving plans, etc. Whether this council was at that place, and there's a lot of councils struggling with just general capacity in terms of people to do the work, and this council has faced the problems that others are facing.
Thank you very much. Chairman, on that basis, could I just extend grateful thanks to all of those responsible for putting this council in such a relatively strong position, and I think it's important that that goes on record. Thank you.
Thank you, Councillor Marshall. And can we put those on record? Thank you very much. Any other questions for Akhtar? No? Okay. Did you want to add anything else, Akhtar, to that?
So when we do actually issue our audit opinion, you will see that we'll be able to certify the audits as complete, because we have completed the value for money work as well. And therefore, that will mean that the audits are closed for any further questions at that point. And then we can just hand on to your new auditors on a clean slate. Hopefully, fingers crossed.
Thank you very much, Abdul. We're going to move on to item 7, which is the statements of accounts 21-22, which is Anthony, I believe. Yeah.
Thank you, Chair. Before I go on to these, I just wanted to give the committee, because I'm conscious there's quite a lot of new committee members around the table, just a little bit of information on the audit environment at the moment, because as I've said, there's quite a lot going on. So the Committee of Public Accounts has just produced its latest report on local authority auditor reporting. Since the committee last reported in July 2021, the performance on local audits deteriorated further. So just 12% of local audit opinions were received in time for the extended deadline for 21-22 accounts. Latest research shows that there's 35% have finalised their 21-22 accounts, and only 7 authorities have finalised their 22-23 accounts. So you can see the scale of the problem here. By the end of November, there was over 630 sets of accounts, some dating back as far as 2015-16, that haven't been signed off by auditors. You can argue, well, why is that important? But you know, financial information, accurate financial information, is crucial for making decisions on budgets for local government bodies, and you can see the consequences at some authorities of not having audited sets of accounts where Section 114 notices are having to be issued. As we mentioned earlier, the Department of Levelling Up Housing and Communities, which is part of government which is responsible for local authorities, announced a range of proposals to address the backlog, including setting statutory deadlines and issuing qualifications and disclaimers of opinion, basically to close off audits and reduce this number, which is the point we were discussing earlier. And the proposal was that they'd be implemented by the end of this year. Today, I'm not aware that the government have implemented those, so that's still open for debate. But you can see the scale of the problem and the issues that and the actions that are starting to be taken by government. So I don't want to say a lot on the 21-22 accounts. I'm just going to say a few points on it. So we publish the accounts based on the Code of Practice of Local Authority Accounting, which is issued by SITBA. For 21-22, the deadline for accounts being published as unaudited was the 31st of July 2022. We published them on the 1st of July 2022, so we were in advance of that deadline. The deadline for actually publishing the audited statements was the 30th of September 2022. We're now in November 2023, and we're not far off publishing those. This particular agenda item recommends the approval of the accounts, although, as Avatar has said, formal completion won't occur until the auditor issues their audit opinion. And the only issues that we've got related to 21-22 are national pension issues, and the impact of the 3-year pension valuation on the accounts. We've obtained pension valuations from the actuary and made the necessary changes that we've agreed. So therefore, to enable us to effectively complete the audit when the opinion comes out, we're seeking approval subject to a delegation to the chair that if we need to make any further material changes in relation to the pension, that we can do that without having to reconvene a committee meeting. That's really all I want to say, but I'm happy to take questions from members.
Any questions for Anthony Thomas? Councillor
I had a question.
Yeah.
Well, okay. On the statement of accounts on page 98, the interim chief executive appears to have left before he started with the dates of the statement. She got him down as starting date the 1st of the 10th, 21, and leaving date of the 10th of the 8th, 21, which means he started 2 months before.
We'll take that away.
Right.
I don't think that's right if that is the case.
Yeah.
Thank you, Councillor Smith. Anything else you want to ask?
No, that's it.
Any other questions from members? Okay, and I believe what we have to do is approve the letter of representation, which is found in Appendix A. And for me to sign it as well, is that correct?
I wouldn't sign it just yet until we've actually concluded the audit, and we can give you assurances that nothing else has to be added to the letter of representation. So it's for you to like approve the content now, and it's on the basis again that there's no further amendments happening to that. But then we would ask you to sign when we're going to sign the opinions and dates are linked.
Thank you, Atar. So are we happy to approve those?
Yes, Chairman. Please, Chairman.
Next item are the statement of accounts for 22-23. Thank you, Anthony.
So it's similar. So again, they're published in line with the Code of Practice on Local Authority Accounting. The deadline for the accounts for 22-23 was the 31st of May 2023. We published on the 28th of July 2023. We had to publish a notice for the delay, which was related to the non-issue of the audit opinion for 21-22, and the need for pension fund valuation reports from the actuary. Again, the deadline for publishing audited statements is 30th of September 2023, so a little bit nearer this time, but behind that. Again, formal completion will occur when the auditor issues their audit opinion. The only significant difference in the accounts where there's been an issue is the pension fund valuations again, and the fact we needed revised valuation reports from the actuary around the fact that for the first year as advertised, we've got a pension asset versus a liability. And the reason that's occurred is because interest rates have increased so significantly, and the liabilities look at over a horizon what the amount of pensions would be that we pay out, but then it's discounted to the current day by bond yields, which are affected by interest rates. So effectively, the higher the level of interest rate, the lower the obligation, and it has actually become an asset this year for the first time ever, which has meant we've had to kick in specific guidance around that. Interestingly, I think CIPRA published their guidance last week, I think it was, to help out, which isn't particularly useful given you're supposed to finish the account by May. But we are awaiting formal audit opinion from the pension fund auditors, providing the necessary assurances. Again, we are seeking approval for the accounts subject to any material changes being delegated to the chair of the committee to do, so that we don't have to formally convene another committee to have them approved.
Thank you, Anthony. Any questions for Anthony in regards to this item? Okay, so
Chairman, if I can- just a very
yes,
quick
Councillor
update.
Marshall.
Sorry to be a little bit late. Just looking at page 6, basically. Expenditure exceeds income. This is shown in red. There's a rather large number, isn't there? So that's 2.437 million. I take it that that's absolutely fine.
So now I've got to do this by memory because I've not got this up, but we have to prepare the accounts based on accounting standards. So I think the table you're referring to, I think there's a number at the top, which is a smaller number, which is the accounts being prepared on what's known as a funding or a statutory basis.
Okay. Yeah, I'm on page 6.
Yeah.
If that helps.
So we then have to convert that to what would the accounts look like if they were prepared in line with all accounting standards. So if we were preparing them in the private sector, what would that look like? So because there are a number of statutory overrides and legal requirements around it, for instance, we don't do full depreciation accounting in the public sector. But what that table is trying to do is to convert what it would be from in the statutory basis to what it would be on the full accounting basis. So I know it looks a big number, but it would be a big number at most local authorities. But the fact we've got statutory overrides at this point in time means it's not necessarily something we need to worry about. If the government decided to abolish all the statutory override, and that was the actual number, then we might have more of a problem, but every local authority would be in a similar position.
Thank you very much indeed. That explains it. Yeah, thank you. It just looked fairly horrendous sitting there at £2.5 million. It rather concerned me. If I got a £2.5 million in the red on my bank account, I'd be concerned. Thank you.
Thank you for the question, Councillor Marshall. Any questions for Anthony? So it is challenging times for a lot of local authorities, and I think it's important to remember that we're not the only ones who are in this position as well. Again, so the recommendations, if I just go back a few pages from page 6, is to approve this report. Can I have a show of hands, please? Also to approve the delegation of authority to the Chair of Audit and Member Standards Committee to approve any changes and potentially re-sign the accounts once we have received assurance from Staffordshire County Council's external auditors in relation to the Staffordshire Pension Fund, and once the changes needed to reflect the national technical issue relating to the actuary valuation of the council's pension fund has been agreed with the external auditors. Are we happy to do that? That was your hands, please. Thank you. That's everyone. Again, just on the item regarding the statement of accounts 21-22, I also need approval for the delegation of authority to the chairman of Audit and Member Standards Committee to approve any changes, actually re-sign the accounts once we have received assurance from Staffordshire County Council's external auditors in relation to the Staffordshire Pension Fund. I just need to clarify that and get approval on that as well, please. Can I have a show of hands? Thank you very much. Item number 9, the mid-year Treasury Management Report, and again, that's Anthony.
Obviously, my last one for the night, Chair. So, just again, because I'm conscious there are a number of new members of the committee, so just the reasons why we prepare the report. So, the Constitution assigns responsibility for scrutiny of Treasury Management to this committee. Treasury Management includes capital expenditure, its funding, the level of borrowing, the level of investments, what's known as prudential indicators, which are a series of numbers that are prepared to inform members around whether the capital expenditure its funding is affordable, sustainable and prudent. They're not intended to be benchmarks, they're not intended to necessarily compare to other authorities, but they're there to provide information on those areas of the requirement. So we prepare 3 Treasury Management reports. So we do a Treasury Management strategy for the committee in around February, and that's what we plan to do for the year. We produce a mid-year Treasury Management report, which is this one. So how are we doing compared to the strategy? And then we produce an annual Treasury Management report around June of each year. And it says, what did we do? How did we perform against the strategy? So just on this particular one then, so the key points I want to highlight are the capital expenditure is projected to be about £9.3 million lower than the budget, 23-24, and the most significant elements of that relate to, unsurprisingly, the big projects. So the leisure centre in Lichfield, not going as we originally envisaged when we set the budget, so that will get reprofiled. That also impacts on the timing of any borrowing that's undertaken. Disabled facilities grants, so catching up, so taking responsibility for delivering disabled facilities grants, catching up with the backlog we inherited from Millbrook, and then the cinema and BRS enabling works. Cap receipts, so that's income we receive from the sale of assets, are in line with the budget at this point in time, but they do assume the sale of Venture House for at least the budgeted sum in 23-24. And then we also prepare some balance sheet projections, and just the key points on there are big difference in the pension obligation or asset and the matching unusable reserve, mainly because of the issues we discussed on the accounts. And then compared to budget, investments have increased due to an increase in reserves and grants and contributions that have been partially offset by a reduction in what's known as working capital, so that's debtors, creditors, etc. The council's, in terms of external borrowing, the council only got one external loan at present, just over £1 million, so it's very low indebtedness. And then just a couple of other points I want to make to members. So regulations and codes of practice require the council to prioritise the security of its investments over liquidity and yield. So you'll commonly hear an acronym called SLI, and that stands for security, then liquidity, then yield. When we measure it in security investments, they're measured as what's known as AA minus. So you have a scale that runs from AAA right the way down to unrated, but goes through B's and C's. And you might remember when there was the credit crunch, a lot of people invested in the triple B's and lower, etc. That's how they got into difficulty. But we're at AA minus compared to a target of A minus. We've also included for members, and we include this in every single Treasury Management report, benchmarking information around security, liquidity and yield, which our Treasury Management advisors are in close provide, and that compares us to all of their clients, so you get an idea of how we compare security, liquidity and yield wise. This particular version of the report, we're also seeking views, if the committee have got any, on a changing approach in relation to strategic pooled investments. So these are the investments we have that are at the more higher risk end of the spectrum, but they produce a higher yield. But over a period of time, they should return a higher yield and be roughly even keel in terms of value. The reason we're looking to change the approach is threefold. So the first one is the change in external financial and economic environment. So when we took these investments out a number of years ago, I believe the environment was much more benign. So we got, this was pre-COVID, low interest rates, low inflation, low debt in the world, relatively low levels of conflict. So if you look at how that's changed now, post-COVID, there's relatively high levels of government debt, there's indebtedness in the private sector, interest rates have increased, inflation's increased, we've got the conflict in Ukraine, now the conflict in Gaza, Israel, and there are elections coming up in both the UK and the US, that the whole environment has changed, and my belief is it's more uncertain and therefore higher risk. The council's committed to use 5 million of its resources to internally fund the leisure centre, so therefore there would be 5 million less of money to invest in the markets. And the key one for me is that at the moment, and I talked about this earlier, there is what's known as statutory overrides. So we don't have to follow accounting practice with certain things because the law says we don't need to. With these particular investments at the moment, any fluctuations in fair value are accounted for on the balance sheet. They don't impact on the reserves and the amount of money the council's got available. The government's intimated that it will no longer extend that statutory override but beyond the 31st of March 2025. SIP for the accounting body have supported that approach, so I think it's highly likely that that will be extended. The consequence of that is if there were big losses, big book losses or volatility in these investments, that would impact on the level of reserves the council's got available. And I'm not sure in that environment with a more volatile arrangement, I'm not sure that that's something that the council should necessarily be involved. So what we're looking to do is at this point in time is to reduce the exposure to these risks whilst we've got time to do that before the statutory override comes in, initially for the 5 million of internal borrowing, but potentially further in the future, once we have an idea if that statutory override isn't extended and we get some idea of whether the financial economic environment is settling down. In terms of the prudential indicators, we're all compliant, so we've got no breaches compared to what council approved back in February. I'm happy to take any questions from them as well.
Thank you very much, Anthony. Any questions or suggestions for Anthony Thomas? No hands raised. Would you like to add anything to that, Anthony?
No, to be honest, I mean, council striking and myself are just seeking from the committee, but use one way or the other. If they think that's a foolhardy approach and we'll be supportive of it, that's all we seek to do before we make the decision. Do that.
I mean, personally, I think in terms of uncertainty and the current climate, I would be more inclined to want to preserve what we have, focus on preserving what we have rather than looking to grow. So, you know, if it was me, I would be taking a more, I'd say, conservative approach, if the wording. But yes, any questions or comments on that, or we'll move on to the next. Okay, so yeah, Councillor Whitehouse.
Anthony, yeah, just one thing I can't get my mind around is section 3.36 of the report, where it's recording a book loss of 1,453 million. When interest rates are high and returns are high, I'm just wondering why it's showing the book loss.
So interestingly, we invest in pooled investments. The assets that sit below those are related to bonds, property, equities, cash. There is an inverse link with investment behaviour around level of interest rates versus other asset prices. So what you tend to see when asset interest rates increase is a flight of capital from equities, bonds, property to cash investments because the interest rates are higher. Obviously, less people investing, so the prices drop, and therefore you tend to see losses in terms of asset values. That's why we've got a book loss, whereas because interest rates are higher, people are moving them out of those asset classes into cash investments where they get a higher return, arguably for down risk.
Thank you.
Thank you, Councillor Whitehouse. Anthony, I've read that in the past that local authorities have provided mortgages, especially when it was the one to buy under the Margaret Thatcher's government. Is that something that we could look at?
I think it's within our ability to do that. You probably need a more full appraisal to do that because one, I suppose we don't own housing stock, which went under the right to buy legislation, we own the properties and therefore it was our interest to provide the mortgage in some cases to people who were unable to get it from the market. But we would have to assess that in terms of the level of risk around that because the market does provide those facilities and therefore it's whether the type of people that would be coming to the council would be the higher risk element, I don't know, or whether they're just people that aren't able to access finance through the means. So I'm not aware that there's any legal constraint around that, but it's probably an evaluation if we chose to do that we need to look at.
Thank you, Anthony. Atom.
I was just going to add, there's not many councils that actually do this scheme anymore. So I would, if you were going to embark on that kind of scheme, you'd have to look at your risk assessment around it because there is a big chance that you might lose money in that scheme. So as an external auditor advisor out there, I would say think hard before you think about doing something like that.
Thank you very much, Abdul. Councillor Marshall, and then I'll go to Councillor Taylor.
Yes, Chairman, I think that's probably getting into the bounds of being rather too risky in my eyes, because if we remember what happened in 2008, that was all about that sort of crash in the economy. Started off in America, I think, didn't it? And it was all about junk bonds and mortgages, where all of a sudden they found that mortgages which they thought were valuable were worth nothing at all. It just seems a rather risky strategy to me. I think that would be a departure from what we would normally do as a local authority. Personally, I'm all for a little bit of risk taking, but I think it has to be done within reason. So I wouldn't have considered that to be a sensible strategy personally, but of course I'm only one of a number of people sitting around this room.
Thank you, Councillor Marshall. I think they called that the Big Short, actually, didn't they, during that time? Councillor Taylor.
Thank you, Chair. I noticed in paragraph 3.56, the recommendation is the reduction of the strategic investments from 14 million to 9 million would provide the £5 million for internal borrowing to fund the leisure centre, which seems well timed. Is one driving the other? Is the need for 5 million driving the choice for a 5 million reduction, or is it just happy circumstance that they are roughly equal?
It's a coincidence around the fact that we are building a leisure centre that council have approved until 1.5 million, with the fact that the environment has become more uncertain and the government is looking at withdrawing the statutory right. I think I've matched them at this point in time that there is a clear link between the 5 million of cash for the leisure centre and the reduction in investments by 5 million. That's why then I've said that maybe we need to look at that in the future, A, depending on the environment, but B, if the council approve further internal borrowing for other. So I think in my own mind, I would like to have a link between the level of internal borrowing and how much we have exposure on these type of investments.
Anything else from you, Councillor Taylor?
Yeah, so we are in effect we're reducing our strategic investments, but also reducing our potential borrowing costs at the same time.
Yeah, that's correct. So the internal borrowing is cheaper at this point in time than going out to the external markets. The other advantages around the internal borrowing are, one, it reduces your risk on credit in the investment markets. You've got less out there. The other advantages is that if, for instance, we've got a windfall from a government settlement or a grant or a sale of an asset, we can repay that without penalty. If we had external borrowing, there would be penalties involved in that repayment.
Are you happy with that, Councillor Taylor?
Yes, thank you, Chair.
Thank you. Any other questions for Anthony? Okay, so the recommendations is to review the report and issues raised within, which I think we've done. To provide views on the recommended revised approach to strategic investments, which we have, and to review the potential indicators contained within the report. Are we happy that we've done that? Yeah. Okay. That brings us to item 10, which is the mid-year Treasury Management Report. Oh, sorry, no, yeah, no. Item 10 is actually the LWMTS Annual Report, and I believe we have our Chief Exec, Simon, who is calling us from the Falklands.
Yes, Chair. Just as you do, Chair, isn't it? But firstly, thank you very much for allowing me to join remotely. It is quite a long way away, so hopefully the internet connection will stand up to us. This evening I'm joined by Kerry Dove, who is a fellow director on the company. But unfortunately, the chair of the company, Councillor Alex Farrell, is not available today and has sent his apologies. So with your permission, what I was going to do is give a very brief intro and then really open it up to the floor for you to ask any question you'd like, if that's okay, Chair. Is that okay? Yeah.
Yep, go ahead.
Sorry, I think there may be a lag as well, so just to make things even more entertaining for everybody. So this paper introduces the first annual report for the council's wholly owned company, Lichfield West Midlands Traded Services. Although the company was created in 2019, it was dormant for the first couple of years. So last year, 2022-23, was the first year of actual trading as an organisation. As you'll see from the report, hopefully you'll see from the report, what we're trying to do through it is to be absolutely open and transparent about what went well during the course of the year, and some of the structures that we've had to put in place, because essentially it was a startup business, and how well the initial services that we put into the company have performed. We started with 3 initial services last year, so landlord services, project management, and talent acquisition. All of those services essentially emanate from the council, and they were previously provided in the council, and we've decided to put them into the company because we felt that we'd have greater freedom and flexibility through doing so. And hopefully, again, some of the results that you'll see in some of the activity that the report draws out shows that hopefully that was the case. We generated about £500,000 of revenue last year, turnover last year through the company, and a very small profit of about 13,000, which was pretty much bang on what we anticipated at the beginning of the financial year. And last year, year one, was very much a startup year. Break even was the ambition, and we've done just a little bit better than that, which is very pleasing to see. The majority of the income that was generated from or through the activity comes from management fee from the council. Essentially, the council is paying a fee to the company to provide the services back to it. And then there was some external funding that we're able to access, particularly through our project management and landlord services as well, that would enable us to do some creative things. And then the last thing I suppose I'd say in terms of the intro is we spent the last quarter or 2 quarters of last year thinking about this current financial year. Our turnover this year has gone from £500,000 last year to around £5.5 million this year. And that's because we've taken on board some additional services. 2 leisure centres are now back in-house and under the control of the council, being provided by LWM. The disabled facilities grants that I think Anthony mentioned earlier in terms of the underspend that we've got and the need to generate more momentum with that service. We put that activity into the company to do just that. And this year we've also put communications in. So at the back end of the last financial year, we spent quite a lot of time with very limited time getting ready to take those services back in-house and to try to turn them around. And I think that was all I would say in terms of intro, unless Kerry would like to say anything there.
Yeah, I welcome Kerry to participate.
Thank you, Chair. Nothing to add at this point, but obviously look forward to feedback and questions.
Thank you, Kerry. Sorry, I thought you were joining because I didn't see you. Okay, I invite members to ask any questions of our Chief Executive, Kerry. Yes, Councillor Marshall, thank you.
Chairman, thank you very much. Under 3.5 leisure services. Well, the last 6 months, obviously, the company's been managing the council's leisure centres with a degree of success, I have to say. The problem is, it's almost the elephant in the room these days, isn't it? That energy prices now are proving to be extremely detrimental to a lot of businesses, almost to the point of being unaffordable. Are we coping reasonably well with high energy prices? And I realise it's something which is totally beyond the control of this council, but it must be taken into account because, of course, it is intrinsic to the running of leisure centres, particularly swimming pools, with the very, very high heating costs. So I'm just wondering what is the impact of the energy costs at the moment, which I know are coming down, but of course a lot of businesses, they're not protected by the domestic cap, which we all are at home, and a lot of contracts for electricity, etc., were signed probably 12 or 18 months ago when energy prices were at an all-time high. Thank you, Chairman.
Thank you, Councillor Marshall. Excellent question.
Yeah, thank you, Chair. I'll try to come back on that. So thank you for pointing out, Councillor Marshall, that leisure services are going very well at the moment. I'm delighted with the initial progress. I think in 2022-23, the previous provider lost more than 500 members from our leisure centres. In the first 6 months of this new financial year, since we brought them back in-house, we've gained nearly 900 new members as well, which is just amazing. Satisfaction is significantly better. Heating is back on in the leisure centres, and I think people are starting to enjoy them as community assets again. We were very careful when we built the budget going into this first financial year, because we were very cautious about the cost of energy pricing as well. So I think we probably, and I'm speaking to Anthony recently just about the same thing, we built too much into the budget. So we've got a bit of headway at the moment. So provided prices continue to go in the same direction, I think oddly that we will probably end up with a small underspend against that line itself, Councillor Marsh.
Chairman, thank you very much indeed for the answer there from the Chief Executive. Thank you.
Thank you, Councillor Marshall. Any other questions from members? No. Okay, so the recommendations for this report is that we just review the annual report. Are we happy that we've done so sufficiently? Thank you. Thank you very much for your time, Simon, as well. Enjoy your visit to the Falklands.
Thank you, Chair. Really appreciate your time. Cheers now.
And also thank you, Kerry, as well for your time. Thank you. That leads us to item 11, which is our internal audit report, which is Andrew Wood. Thank you.
Thank you, Chair. I'd like to present my report on internal audit's Q2 progress, and my report covers the period up to and including the 30th September 2023, and it outlines the work completed during that period, and that's contained within Appendix 1 of my report. The audit plan for 2023-24 contains 19 audits, and as outlined, we have completed 11% of the plan against an originally profiled completion rate of 58%. That is obviously due to exceptional circumstances that are currently affecting the section. We do continue to draw down resource from BDO, and this is reviewed on a fortnightly basis to ensure that we can complete at least 90% of the audit plan by the 31st of March 2024. To provide assurance to committee, I can confirm that BDO have fully resourced the additional work requested, and this is planned for quarters 3 and 4 of the financial year. Audits have been fully briefed and scoped, and indicative dates have also been agreed with management for the start of those audits. The contingency plan for the delivery of the audit plan during this year will continue to be reviewed and updated as necessary, and I'll keep members updated on the planned work during the year. We have had 3 audits this year: Payment Card Industry Standards, DWP Searchlight and Section 106 reviews that were rated as limited assurance. Again, I want to provide assurance to committee that these will be re-reviewed, and again to provide assurance to you as the committee that the respective audit recommendations have been implemented. These reviews will be undertaken during quarter 4 of 2023-24. Additionally, I can provide assurance to the committee that all limited assurance reviews are now also reported to the council's leadership team for review. I can report that one limited review from 2022-23 in relation to GDPR has now been fully re-reviewed and is now reported as substantial assurance, following implementation of the Improvement Action Plan and also those recommendations. Moving on to recommendations outstanding, as at the 30th September 2023, we had 208 outstanding audit recommendations, and in agreement with leadership team, I'm currently carrying out an extensive review with management of those recommendations. This work will complete by the end of December 2023, and I'll report the results to committee at its meeting in February 2024. I've also included within my report the current high priority recommendations, and again, those continue to be reviewed by leadership team, and a breakdown of those is contained within Appendix 1 of my report. I'm more than happy to take any questions that you may have.
Thank you very much, Andrew. Any questions from members? I'll start off by asking, obviously I understand why we are behind with this. When can we expect to be back at kind of 100%? Thank you.
Currently in
currently in relation to that, there is a phased return effectively for the principal auditor that is currently ongoing. In relation to the work is being covered by BDO currently and myself as audit manager, and also the IT auditor is completing his reviews as well. I expect that coming up towards the Christmas period and into the new year, that the actual completion rate for audits will improve, and that by February I'll be able to provide a better position in relation to on the 31st December. We are obviously, as you've outlined, we are behind the curve in relation to the completion rate for audits, but again, BDO have assured me that those resources are available to carry out those reviews. Obviously, as part of those reviews, we do require management assistance in relation to completion of reviews to make sure that they're started in a prompt and timely manner. And again, that's part of my reporting to leadership team in relation to those reviews as they're coming up during or forthcoming. So again, that provides me with assurance that the leadership team are providing both the resources, but also the impetus to obviously complete the audit plan. Our KPI is to complete 90% of the audit plan for the year. At the moment, that's where we're aiming to actually hit by the 31st of March. We normally have a couple of audits that normally roll forward into the new financial year, but again, that's due to timing of completion rates for those reviews. The reviews don't actually complete until we've actually issued the final audit report. So again, we might have already done the field work and we've got up to a draft report stage. We're just waiting for management acceptance of recommendations, for example, and then we issue the final report.
Thank you, Andrew. Anthony.
I was just going to add to what Andrew said about management support, and this is to give members an illustration of some of the conflicting demands. So my team, I think we've got an audit on accounting, budgetary control this year, and we're having to fit that in around trying to get the accounts finished for 21, 22, 22, 23, and how the new external audit is in the audit plan. So that's not a willful avoidance of the internal audit. It's just the fact that we're having to manage a set level of resources that are doing a number of things, as well as doing the medium-term financial strategy and budget monitoring, and therefore I'm having to be careful in balancing those resources on what they do at any particular time, because otherwise we'll burn those employees out if we're not careful in the finance team. So it's to give some assurance to members that we're not willfully avoiding doing the audit, but we're having to balance what the competing priorities at the same time.
Thank you, Anthony. What support do you think you may need from senior management to kind of cope with the workload that you have at the moment?
At this stage in my team, I can only speak for, I don't think we need any further support. We had a new accountant start a couple of months ago. We've got a new one starting in January, so that will get us up to the full complement. And it's the balance of the priorities in some cases. So having to say to people, we will do this, but it might take a little bit longer. We might have to wait a little bit longer, because there are so many competing activities going on. That's why it's so crucial that we get the 21, 22 and the 22, 23 accounts finalised, because that takes that priority where we can focus on 23, 24 moving forward.
Thank you, Anthony. Any questions regarding that? Councillor Marshall, thank you.
Thank you, Chairman. If there was one thing guaranteed to get the little synapses in my brain glowing a little bit brighter, it was the words climate change. I'm just looking at Appendix 1. I'm just wondering how onerous is climate change in terms of impacts on budgets at local authorities, because it's a bête noire of mine that climate change and the legislation surrounding it is going to prove unaffordable for businesses, local authorities and government in general. So I'm just wondering what sort of impact is the climate change legislation and compliance with it having on this local authority at the moment, please, Andrew?
Councillor Marshall,
sorry,
give you an idea.
Thank you.
I don't think at this point in time it is particularly onerous. I think we originally set a sum of, I'm trying to remember, around 100,000 aside for climate change. I think it would be fair to say until the full appreciation of what the requirements are and the action plan that the council is going to use to implement those, I would argue that we've not got a fully costed set of proposals. Therefore, I can't 100% say to you it's going to cost X or Y. However, what I would say is that if the government impose requirements on the council to comply with various laws, etc., they're obligated under what's known as new burden to provide funding to the council to implement those proposals. Now, whether that is the full cost of the proposals, a proportion of them, we'll have to wait and see. But just as an example, the government are introducing or mandating the introduction of food waste across local authorities. They have committed to provide funding, but they've used a rider or a caveat at a reasonable level, which therefore that doesn't necessarily mean it will be the full cost of implementation, and an element may fall on individual local authorities. I think it's going to depend very much on what position the local authority is in on their waste services at this current time. For instance, have they got the capacity in depots to take additional vehicles, etc., etc.? Some will be fine, others may not. So all I would say is that there is an obligation on the government to fund these if they require it under national law.
Chairman, may I just thank Anthony very much for his very comprehensive answer. Thank you.
Thank you, Councillor Marshall. Councillor Paul-Taylor, thank you.
Thank you, Chair. Yeah, Councillor Marshall won't be surprised to hear that I believe what will prove unaffordable is not to address climate change. I'm grateful that climate change does appear in these audits. I would ask, one of the recommendations was the establishment of a cross-departmental working group to meet on a monthly basis. Do we know specifically whether that recommendation has been implemented yet?
Yeah, as far as I'm aware, that hasn't been implemented, and this is part of the follow-up reviews from those areas which are limited reviews that we do follow up to make sure that they are fully implemented. But again, I'm not aware that that has been implemented currently.
And again, to echo the chair's comments, what do you need in order to press for those to be implemented before we actually get to a review to find out that they haven't been done? It would be nice if the departments were not waiting for you to follow up.
Yeah. I would suggest is part of the follow-up that I have on a monthly basis with leadership team of bringing the outstanding audit recommendations to leadership team. Again, for leadership team to drive those recommendations forward. Again, as part of internal audit, we obviously make those recommendations in relation to climate change and the other reviews that we carry out. But again, we are reliant then on managers to actually put those in place and actually implement them. I think, again, this is one of the reasons why I meet regularly with leadership team on a monthly basis to bring those to the fore. And it's also sort of linked in with the current outstanding audit recommendations as well, to make sure that with other managers within the authority that they are given the priority that they needed to resolve those issues and complete the outstanding audit recommendations.
Councillor Taylor.
Thank you, Chair. Thank you very much. Could I just ask another question about the section 106 recommendations? And at the top of page 21, I think the first recommendation at the top of page 21, it does seem that we were not following up on timing for the invoicing of section 106 monies, and at one point we had failed to invoice nearly £250,000, well, just over 200,000 pounds worth of section 106 money, particularly in the current climate where construction companies and developers are struggling financially, there is a very real risk that if we delay invoicing by months or even years, that we may find the company no longer exists or no longer has sufficient financial reserves to pay our invoice. Do you know whether those improvements have been made on those yet, or will that depend on the outcome of your review again?
Again, part of that is from the outcome of the review that I'll be undertaking. That recommendation specifically as well has a date of 31st December 2023. But again, I can follow up with the respective management on that and then feedback to the committee on that.
Thank you, Andrew. Anything else from you, Councillor Taylor?
No, thank you very much, Andrew.
Thanks for your questions. Anything from anyone else? Any members or officers? So that will now bring us to item 12, which is my front sheet, which is our risk management update, which is again Andrew Wood. Thank you.
Okay. Sorry, Chair. Do we need to go back and note the recommendation for the report? Thank you, Chair. My next report I'd like to present is in relation to the quarterly update on risk management to the committee. The last update reported to this committee was actually on the 20th of July 2023, and the strategic risk register was last considered at leadership team on the 27th of September and is contained within Appendix 1 of the report. I would like to highlight to the committee the respective updates to the risk register, and these are as follows. Strategic risk 1, we've now included a sub-risk concerning potential growth items affecting budget pressures. Strategic risk 2, we've removed all reference now to COVID-19. Strategic risk 3, we've updated the wording in respect of being a better council. And strategic risk 5, mitigated controls are now in place with the inclusion of the Staffordshire Leaders Board and the Staffordshire Chief Executives Group. And additionally, wording in respect to the first line defence around day-to-day delivery of the homelessness strategy. I'd like to bring to attention of the committee, additionally, we have a number of horizon scan risks, and these risks that whilst not currently strategic risks may develop further and require inclusion on the main risk register in the next 6 to 9 months. The horizon scan risks including continuing risk in relation to GDPR, although whilst I previously reported that we've now got substantial assurance in that area, GDPR and potential data breaches are an ongoing risk which management needs to ensure is continually addressed. Climate change is also included in relation to addressing the public and political aspirations of the area. Also, there's local and strategic plan in relation to costing of planning challenges and appeals with associated budget pressures. And finally, potential impacts of Section 114 notices in the locality. All changes have been highlighted in yellow within Appendix 1. I can report that between July and current date, the Council's risk profile has not changed, but we continue to review strategic risks and ensure that appropriate risk scores are allocated and reviewed on a regular basis. I'm more than happy to take any questions that you may have.
Any questions for Andrew on item 12? No. So the recommendations for this report is not only to note the risk management update, but also receive the assurances on actions taking place to manage the council's most significant risks. Are we happy that we've received those assurances? Can I have a show of hands, please?
Yeah.
Well, thank you. Thank you, Andrew. Brings us to item 13, which is the counter fraud update report, which is again Andrew Wood. Thank you.
Thank you, Chair. On an annual basis, I bring to this committee my update on counter fraud, together with the updated fraud policies of the council. Our internal audit work is risk-based and takes into account fraud risks within our reviews. Additionally, the council takes part within the National Fraud Initiative, which is part of the Cabinet Office's National Data Matching Service. Data matching requires the council to upload data for matching to other areas and includes, for example, housing benefit, council tax single person discount, the electoral register and creditor payments. This data is matched and reviewed internally. This work is progressing and further refreshing of data will be required towards the end of November 2023. And this is planned with ICT to ensure that that data upload is carried out. My report also includes appendices 1 to 4, which are the council's fraud policies, and these have been updated slightly for change of job titles and the inclusion of assets of as our external auditors. The policies themselves relate only to the district council, and Lichfield West Midlands Trading Services will be developing their own suite of policies in due course. The updates have been completed within my delegated authority and are attached for your information. Following this meeting, all Lichfield District Council staff will be circulating copies of the appendices and they'll also be held on the council's intranet site. I'm more than happy to take any questions that you may have.
Any questions from members regarding this item? I have a question regarding page 187 of the pack. What to do on suspecting a fraud. There's advice for members of staff and managers, but nothing for elected members on how we can act on that. Might that be a good idea to include it as well? Thank you.
Yes, I agree, Chair. I'll include that as a separate section within the policy.
Thank you very much. Any other questions from members or officers? Thank you, Councillor Marshall.
Chairman, it's not non sequitur, but in terms of counter fraud and effectively that often relies upon whistleblowers. They're an intrinsic part of combating fraud, really. But I say it's slightly non sequitur because only a few weeks ago I read a very disturbing report in the national press about HS2, where people who tried to blow the whistle on fraud within HS2 were actually sacked. So I'm rather hoping that we wouldn't follow in the behaviour of HS2, which I think was quite deplorable, where they were trying to save taxpayers' money and ended up being sacked as a result. So I really hope that our whistleblowing policy, if we have one, would protect those people far better than it did with the rather wasteful organisation of HS2, which I think most of us probably deplore. Thank you, Chairman.
Thank you, Councillor Marshall. We do have a whistleblowing policy, and I'm sure Andrew would like to go through that. Thank you.
Yes, Councillor, we do have a whistleblowing policy, and that is provided as part of the confidential reporting policy that we've got. Again, we do outline to all members of staff and all elected members that obviously any whistleblowing that does happen is dealt with in a serious manner, and we do review and investigate those if we do have any whistleblowing incidents in relation to that. Again, we do obviously the policy does include that we protect that whistleblower as well in relation to that. And again, we do review and accept both named whistleblowing events and also anonymous whistleblowing events that do occur. So again, we do have that protection in relation that the policy is designed for the workers, and those workers include employees, agency workers, also people that are training with an employer but not employed, and also self-employed workers as well. So we do cover that and provide protections to those members of staff.
Thank you. A very big thank you there then to Andrew for that very reassuring response. Thank you, Chairman.
Thank you for the question, Councillor Marshall. Councillor Whitehouse.
Yeah, thank you, Chair. Pardon me. To build on this point about whistleblowing, item number 3.4 indicates that there's been one incident in 5 years. So we're talking a lot about whistleblowing, but actually doesn't appear to be in reality.
No, and that is a more recent event that's currently going through investigation at the moment. But no, we haven't had many in the last 5 years. That is the only one that we've got it effectively or had in recent past.
Come back on that, Andrew. Does that mean that maybe people don't know what the process is? Maybe there's more communication to be done. Is there something missing there, not to get a bigger figure than you would have expected to see?
Sorry, there is an argument that that is the case. You could make an equal argument that in the right culture, people feel they don't need to revert to a whistleblowing policy to express their concerns. If they've got trust in the management, the processes around it, they will go to somebody without having to revert to a whistleblowing arrangement. So it can be a symptom of a good culture as well as a bad culture if it's applied.
Yeah, thank you. Good explanation.
Yeah. Yes, Andrew.
And just to provide council with assurance in relation to that, then we do annually communicate all those policies to members of staff in relation to that. And again, as I alluded to, they are held on the council's intranet site as well, so that they have got access to all the policies, so that they are aware of what to do if they do have a whistleblowing concern.
Thank you for that. And just following on from that, if people are aware, staff are aware of the processes, is there an annual testing facility to make sure that not only are they aware of it, but they understand it as well as being tested?
Not currently in relation to that, but we can have a look at putting something in place in relation to that, whether that's done through the e-learning facility that we've got at the council in respect of that basically there's a positive acceptance of those policies. I can obviously have a look at doing that again. I think that's me.
I suppose what I would say, accepting what Andrew said there, two things to that. Point number one is that we've had a whistleblowing allegation, and therefore there's an argument that it's well known it's from the part of the organisation, which isn't necessarily an office-based environment. And secondly, Simon has communicated that through these weekly messages, how seriously we take that, and that in its own right has raised the awareness of not only the whistleblowing policy, but how seriously the organisation takes anything that comes through. So that in its own right has raised the awareness, but we can look further at that forward.
Thank you.
Thank you, Anthony. Anything else you want to add to that, Councillor Whitehouse?
No, thank you, Chair.
Councillor Smith, thank you.
Yeah, the report mentions the whistleblowing policy in several places, but have members actually been issued with a copy of it? Because I don't remember reading it.
The policy, the whistleblowing policy.
Whistleblowing policy, yeah.
Members as in elected members.
Yeah.
I actually personally do recall seeing this when I was first elected, anyway, back in 2019. But I don't know whether Andrew has.
We can have a look at that and confirm that back to councillors on that. Thank you.
Thank you, Andrew. On page 225 of the pack, the internal reporting form. I noticed one of the questions asked is gender, and I'm addressing this due to sensitivities around gender. I don't quite see why that's a relevant question on a reporting form.
What I'll do, councillor, is Chair, I will review that and potentially remove that. This is I would suggest that this is it's been taken from other elements. So what I'll do is I'll review that. Thank you.
Thank you, Andrew. Any other questions from members or officers? No. Okay. Just go back to the first page. So the recommendations for this report is to endorse the contents of this counter fraud update report. Are we happy to do that?
Sure. Yes, John.
Yeah, that's everybody. Thank you. Okay, item 14 is the work program. I'm going to hand that over to you, Will.
Thank you very much, Chair. Nothing really to report here. The work programme for this committee is pretty consistent from meeting to meeting. I do believe potentially the only change since the last meeting is that as we are transitioning from external auditors, we have a section for both sets of external auditors at present. In time, that'll become one section again. Other than that, nothing really to flag up as a change. That should mostly be the same as it was at the last meeting. Happy to take any questions on that, of course.
Thank you, Will. Any questions on the work program members? Anthony?
It's probably opportune, given they've taken the time to come to the meeting, to introduce the new external auditor sitting at the back. So Laura, who's the partner, and Helen, who's the manager or director. They both work for assets, so they will be our new auditors moving forward. So the next meeting, I believe they're bringing their audit plan remotely, so you'll get more of a chance to meet them and raise questions with them.
Thank you, Anthony, and of course a very warm welcome to Laura and Helen, and thank you for taking the time to come to this meeting this evening.
Thank you, Chair.
Item 15 brings us to the exclusion of public and press. So I'm going to read out a very short segment, and that is that as publicity would be prejudicial to the public interest by reason